Good morning and welcome back to Almus Market Mornings. The tariff related conversations have stayed alive domestically. All of us are awaiting the deal India is going to crack with the US. But meanwhile, there are a few updates coming through for other countries. For example, President Trump has said Vietnam has agreed for a trade deal, which would be keeping tariffs on Vietnamese export to the US at 20% and 40% on goods deemed to be transshipped. On the markets front, the dollar initially showed some strength but failed to capitalize on that move. But there are some concerning moves coming out of the UK gilt market. The 30-year gilt moved up by 21 basis points in a dramatic fashion, which is threatening to sharply increase the UK's long-term borrowing cost. Good morning, JK. Lots of updates coming through. Today, we also have the important job market data from the US. What's your read on the market positioning?
Good morning, Swaraj. A lot of developments overnight, first of all, the gilt market in UK saw the yields on 10-year yields rise by almost 24 basis points after the government reversed its saving by about 5 to 6 billion in the budget deficit because there was a pressure from the political side to restore it, and that has once again created a specter of the fiscal uh, negative from the UK government, and this actually spilled over to the other markets as well. In Germany, also the yields went up by 7 basis points. In euros, the yields did go up again, but then only due to the negative, number in ADP, it came down. So what it does is that we have the German fiscal spending also coming through. Inflation in Europe went up to ECB's target, and the chances of another rate cut is now questionable from ECB. US has the big spending and tax cut bill, which is likely to add to the the overall debt by about 3 to 4 trillion in the coming years. So all these things are once again giving those bond market jitters, and this is what the market is facing. And of course, we did not have much impact on other markets, but it's only a matter of time before we see the things spreading to the other markets as well, because market is waiting for the issue on the tariffs to be resolved in the coming days. And we also have the key job market data coming up today, tomorrow being a holiday in the US due to Independence Day. All the important numbers, particularly the non-farm payroll, which normally gets published on the first Friday of the month, gets published today, and the expectation is not very great. It's likely to be around 1 lakh compared to 1,39,000 that was seen last month. And the lead up to it is not been great either, because we had the private payroll number coming at minus 33,000. Actually, there was cut down in the number of jobs in private payrolls. And this is, for the first time it's happened after 2 years. And that's not giving good sense to the market. This is the only reason why US yields did not spike up much more. And then by side, we also had the tariff issue, or rather the trade deal signed with Vietnam and US, uh, where there's 20% tariff on direct imports from US, yeah, sorry, Vietnam, and 40% on deemed imports, where other countries supply to US through Vietnam. If this was the criteria for other countries, I mean, it's not going to be great news, because already trade is getting affected, and there is sense that the US economy as well as the global economy will suffer due to the trades. However, this might be looking to make up for some of the deficits created out of the tax and the spending tax cut and the spending bill that the government has proposed. And once again, there are also doubts whether the House will pass the bill as it is. There are possibilities that it can be once again returned to the Senate for reconsideration. So the president's ambition of getting it passed before the July 4th Independence Day is still in doubt. That's another source of uncertainty. So there is an economic uncertainty, the fiscal uncertainty, also is playing through. And then the monetary policy uncertainty. There was a fresh pressure on Powell from Trump saying that Powell should resign immediately. I mean, it's nothing new. But then the persistent pressure is something that the market is looking at, and whether eventually something drastic might happen of a new chairman for Fed being appointed, working as a shadow chairman or something. The market is not liking it because it's going to be a complete threat to the independence of monetary policy. So there are all these developments are not giving the markets any sort of comfort. Although we have seen the stock markets remaining calm, perhaps waiting to see how all these things play out. And suddenly we might have a burst of movement also. And in the currency market as well, dollar has been consolidating. It did rise a bit yesterday, but then it has come back on the back of the monetary policy jitters and also the weak U.S. data seen yesterday. So I think we are heading into the weekend. At least in U.S., they're heading into an early weekend, but not with any sort of comfort, because next week could be much more uncertainty and volatile. There are also talks that the next trade deal could be with India, but that we need to wait and see. It's not about having an early trade deal, but also how the terms are between the two countries. There are talks that there can be substantial lowering of the duties from Indian side. Also, how it impacts the Indian market and the Indian economy is also something that we need to wait and see. In the meantime, Rupee also traded in a very narrow range yesterday, absorbing all the news. And I mean, somehow, despite the being supported at 85.50, upside also has been quite contained in the last few days. 85, 70, 75 has not been helpful. So we see a very narrow range continuing as far as the rupee is concerned for today as well. And although we have not heard of much inflows, even the buyers have been stepping away. I think waiting for all the big events. So we head into the Thursday with the full of action expected post data, and also the weekend event about how the tariff issue will get resolved, as well as the Fed chair, whether they react by, if there is a very weak number on non-farm payroll, whether the Fed, changes its stance on the interest rates in the coming days is what we are waiting to see. Thank you.
Thank you, Jake. And a lot of things going on in the markets. We are awaiting the tariff-related updates, especially the kind of deal India signs. That would be very important when it comes to the bond markets. They are showing great signs of unease, especially after political pressures resulted in sharp rise in UK gilts. It has also spiked to some other markets. For example, German yields also inched up by 7 basis points on the 10-year. Inflation in Europe going up to the ECB's target, as well as the fiscal spending by Germany. So all of these are pushing the European yields higher. Though yesterday the dollar strengthened initially, and then it cooled off on the back of the weak private payrolls data. Today, of course, there's the all important NFP and the unemployment rate that will be closely watched. When it comes to the rupee, we traded in a very narrow range, trading between 85.70 and 85.40. And as Jackie mentioned, that is expected to continue today as well. That's it from us today. Thanks for listening. Tune in tomorrow for the fresh round of updates on the markets. Thanks for listening.